SMC trader, so basically everything I'll be using here is SMC concepts with a touch of price action, assuming we do see opportunities that we can take with the price action. Okay, so first things first, we want to do our top-down analysis. Okay, and this is the daily time frame. So I'll be switching this to the weekly, alright, so that we can have a better scope, right, of the overall market direction. So from the weekly time frame, this is a clear downtrend, okay, and we know this how? We know this because of the presentations of the series of lower highs and lower lows consecutively. Okay, so here, here we could see that this was the last swing high, and then this is the lower high. Sorry, the lower low. This is the lower high, lower low, lower high, lower low, lower high, lower low. Actually, I won't consider this as a lower low because price failed to break this particular low down here, so I won't consider this as a lower low. But then this high was not broken. Okay, so that's why it's not equal highs. This high is not yet broken. So what we want price to do, since we're still in a downtrend, obviously we want price to clear this particular low. Since we're still in a downtrend, until we get any like further confirmation that the price or market has switched its character. Okay, so sorry, this is the last low, the last high. Sorry, this is the last high. So we want to see price reacting upon this region. That's assuming price is going to the buy side. Okay, let's assume the market has changed its direction and is currently going bullish or wants to start going bullish. Price will have to break through this high and then create a market structural shift, right? Create a market structural shift, break it, come for a retest. That's creating something like this. Break it, come for a retest, and then this is when we can categorically see that the market has changed its character from a bearish momentum to a bullish momentum. But for now, from the weekly, what we can deduce is that the market is still in a downtrend. So we want to look at a good sell opportunity. And since we have this like looking like this, if you pop out our tool and then having our premium and discount zones, let me just add the middle line. You can see that price is actually in our premium level, which is a good position. Let me change the color to something lighter. Okay, you can see that price is currently in our premium zone, which is a good avenue for us to take a sell, since like we already concluded that the market is going in a downtrend. So this is one thing to look at. Now, since we're done with the weekly time frame, what we need to do is to zoom down to our lower time frame. Okay, I think I have a course on this top-down analysis that I did. So if you want that, I'll drop a link or I'll tag it at the end of this video so you can go back to that if you still need more clarification. So I'm going back to my daily time frame. Okay, and hopefully I'm looking at seeing a good sell or a short opportunity for me to take this particular trade all the way to the downside. Now, one thing I think I took this trade somewhere around here. It was strictly price action I used. I'm coming, sorry. Let me pop my tool up. So I had a breakout and the retests on the trend line. Sorry. I had a breakout and a retest here. I think this is exactly what I had on the trade, and so I took the trade here. And then I equally had this particular OB here with little inefficiency. I think from our lower time frame, our 4 hours time frame, this would be much more clearer, but for now this is what we have here. Okay, so I took my trade I think around this particular point, and my SL was just down below here. My take profit was actually here. This was my first take profit. I exited all my positions here actually, so I didn't hold all the way to the top, but that was ideally what I was supposed to do, but I didn't. Anyways, back to it. So this is what the daily time frame is giving us. Okay, we have a clean breakout and a retest on the trend line. This is clean or clear price action strategy. Okay, but then we decided to spice it up with a little bit of SMC, which is what we have here, the order block here. Okay, I told you if you zoom down to a lower time frame, you get a clearer picture, or you can label this as your demand, whichever one you want to. Still fine. Okay, so this is my demand zone here, or my OB, whichever one. And then, like I said, I'm anticipating price to come back up and then create a reaction at a key region. Okay, now since we've concluded the market is still in a downtrend, you can hypothetically use your Fibonacci. Okay, you can use your Fibonacci tool from the top to the bottom and get your 0.618 level. I think that's what I used, and that's why I exited my trade from that region. I'll pop out your FIB and then look for a retracement. Actually, price has broken above our golden ratio, but you can see that there was a rejection from this particular point. Okay, there was a rejection, and then boom, price had to break out, most likely to clear liquidity above. Okay, most likely to clear liquidity above. So this is basically it, and I'll just adjust this. Okay, this is basically it, right? So another thing we need to look out for is for the fact that price made a double bottom here. Okay, this is what most retail or price action traders would like. Double bottom, if they get their confirmation, they enter in for their massive buys. It's still good as long as you have all the confluences. We have a clean breakout and retest, we have an order block or a demand level, and then we have price making a double bottom at this particular point, which is a good avenue to enter. But if I were to enter, I would wait for price to clear this particular phase, right, to finish this particular phase, because it was consolidating at this point. So I would anticipate price to break out of this zone, okay, either upwards or downwards, to tell me the ideal direction that the market would move towards, and then I would hypothetically enter my trade at that particular point. But for now, at this juncture, like during this whole thing, I would have exited my trade, assuming trading just chart patterns, okay, like see the double bottom. I would have to wait to see clearer confirmation for price to give me its overall move, and then picking it up and trading with the trend as well. So this is basically it. Then I'm just delete this so that the chart won't look that messy. So I'll move down to my lower time frame, my 4 hours. This is just a clear top-down analysis. Again, top-down, but to show you how I would hypothetically enter my trades. Okay. Now, if let's assume you missed this particular entry. Okay. Remember our daily time frame was. Sorry, let me go back to the daily time frame so I would show you something. Let me mark it back. That consolidation phase I was telling you guys about from the daily time frame, I want to have it marked out so that once we move to a lower time frame, we can get a clearer picture. Let me change the color to, yeah, I think this is way better. So move back down to our 4 hours. Now you can see that from the 4 hour time frame, the chart is a bit more redefined. Okay, it's a bit much more redefined. The zones are clearer now compared to the daily time frame. So we can adjust this to this particular level here. Yeah, like this. So this is giving us a much more refined trade. Okay, now this is where the consolidation phase started from. Okay, consolidation phase started from here. It was just making a sequence within this particular box, right? It was just dangling. So you could literally have marked out your supply and demand within these zones, and then you can be trading in between the zones. You can see that whenever market touched, it just rebounds until this particular point where you broke out here. So here there was a breakout and a retest on the zone. Okay, we already have our zone marked out, so this is where we're interested in, and then want to see what price will do. If you notice here, price broke out of the zone but came back in with its wick. Sorry, let me make it clear. Price broke out of the zone and then came back with its wick. Okay, closed inside of the zone. So this is giving us a strong confidence that okay, this particular zone that we marked out would literally hold price for quite some time. Okay, this particular position would hold price for some time. So this is just basically it. And you can see the exact same thing happened here. It came back in, and then this one, it came back. It didn't close with its full body outside. Compared to what this candle did, it had this is a momentum candlestick, right? And then it closed above the particular range, above the range that was being traded. And he left out some inefficiencies, which is fair value gap. Left out this inefficiency here, which the market came back to fill. So hypothetically, this would have been a very good entry point. FVG. This would have been a very good entry point. Okay, here within this fair value gap. So this is basically what we can deduce from our 4 hour time frame. And the 4 hours is already giving us a bullish move, right? That's creating series of higher highs, higher highs, and higher lows consecutively. But we know that the overall trend is a downtrend. As long as the market has not broken through the last high, the previous high that we marked out, we are very much certain that the market is still in a downtrend. Okay, so what do we need to do now? We need to wait. I think this is the high. Okay, no, it was somewhere around here. This is the high. One price to come and break. Okay, so we need to look for a point, a PRP, which is a possible reversal point, a key indication in this particular trend that the market has exhausted its move and therefore needs to start giving us that sell move, then we can trade with it. So what we need to do is to go down to our lower time frame to get clearer pictures. You can use your trend lines to mark out your okay. You can use your trend line for price action traders. Okay. Now while marking this with the body, some people actually tend to use the wick, but I prefer using the body because it gives me a much more clearer picture of what I want and how I want my charts to look like, because sometimes we tend to mark the wick and then market might come and retrace at this point. Let's say the market starts retracing and then retraces at this point and then starts buying, for instance. Now because we marked out the wick, there's a tendency that the price might not react to this particular point, but if we had enclosed it from the body, you could see that the price literally came to that zone. So that's why I feel it's safer to take my trades with the body and not the wick. Drawing my trend line with the body and not the wick. So that's basically what I do. Okay, so now we've not had any clear indication that the market wants to start going bearish at any point in time. So for the fact that we know that this is a downtrend doesn't mean we'll just enter the trade from any part or anywhere and then sell it. No, we need to wait. We need to see a clear confirmation that the market is going bullish, like what happened here, right? You can see the market created a high and then a low, and then came back, created a high, and this last low was broken. Okay, this last low here, this is the last low that was being printed now, and then the low was broken at this point, and the price came back, mitigated upon this flip zone, and then started selling. So ideally, what we're expecting is for the price not to break above this last high here, this last high. Okay, sorry, I didn't pick it too. We are anticipating price not to break above this last high, just like it didn't break above this one while it was coming, right? So that's what we're looking at. We would have been looking at, would have been looking at price not breaking this last high here, so that we can continue in the bearish move. That's why it's always good to pay keen attention and then understand the market's mechanics, the way the market moves. This low here would have been a very good low. Here would have been a very good low to be broken, but as you can see, it wasn't broken. Let me adjust this. This low wasn't broken. This particular demand zone down here as well wasn't broken. Here, this demand zone here wasn't broken. So we literally have zero to no confidence as to why we should take this particular sell trade. Okay, we don't have anything. We don't have any indication as to why we should take this trade. So this is what we want to see. So for now, if there's going to be any change of markets, any market shifts, market structural shift at this point, we're going to sell the trade all the way to this trend line first, until we see a good reaction as to why we should hold this trade. Okay, but if we get to this trend line, then we see a rejection or a reaction, and then price mitigates it and invalidates our sell and starts buying up, then we can exit this trade in profit. But for now, I don't think this is a good point to start selling.